Hey guys, so in this video I will be tracking the performance of my June 2017 stock picks. I do this every month as a follow-up to the recommendations that I make so that I can compare them to the S&P 500 and see how the performance of the picks is stacking up compared to the S&P 500. If you're new to this channel, I make videos on the stock market and investing, so consider subscribing if you're interested in that, and let's get right into the video. So the first stock that I recommended in June of 2017 was LyondellBasell Industries. The symbol for them is LYB. And I made that recommendation on May 22nd. And since then, they are up 12.4%. So that's a great performance. They also have a 4% dividend. I'm not sure if they've paid a dividend out since I recommended them, but definitely solid performance from LyondellBasell. Hopefully, we can continue to see some good performance from them. They are still trading at a relatively solid value with a 10 price to earnings. I'm not buying more right now, but so far this pick has done quite well. So the second stock that I recommended in June of 2017 was Shire PLC, and the symbol for them is SHPG, and they have not done anywhere near as well as LyondellBasell. I made that recommendation on May 22nd, and they are down quite a bit since then. They are down a total of 22%, so that's definitely really poor performance. I think that it's a good buying opportunity right now. I think the stock is definitely quite undervalued. I made a video recently analyzing them, but yeah, I think they're undervalued. Definitely not happy with this performance. This has been my worst pick by far, but they've just had some bad luck recently. They went down 7 or 8% after a earnings report where they beat top line and bottom line, and then their CFO announced that he will be resigning at the end of the year, and that pushed the stock down another 4%. So I do think it's a good buying opportunity right now. We will see what happens though. So then the third stock that I recommended in June of 2017 was Delta Airlines. The symbol for them is DAL. And they were off to a great start, and then they pulled back quite a bit. So they are currently down 3.73% since I made the recommendation. And I think it's a good buying opportunity right now. Nothing has really fundamentally changed about the company, except for the fact that they raised their dividend by 50%, so their yield is now 2.6%, so that's great. I think it's a good buying opportunity. Also recently made a video analyzing them. But yeah, I think it's a shame that they pulled back so much. I think it's more just a transition of short-term traders out of the stock. As you can see, in the last year, it was up 51%. So a bit of a pullback is definitely reasonable after it is up that much. But I do think that it is trading at an attractive valuation right now, and will continue to be solid moving forward. So then the fourth stock that I recommended in June of 2017 was Exxon Mobil, and they have not done as well either. They are down 6.7% since I made my recommendation. I think this presents a good buying opportunity. They've just been down with oil, and they have a solid dividend right now. They're pretty attractively valued compared to their past, so I think it's a good buying opportunity. It's a shame that it's down, but like I emphasize every single time I make these performance tracking videos, the performance over 1 month or over 2 months or over 3 months really doesn't matter. It's the long-term performance over several years. So we will see what happens in a couple years when I'm making these performance update videos. It's a shame that some of these stocks are down now, but I still think that they are going to be solid long-term. So then the fifth stock that I recommended in June of 2017 was Gilead Sciences. The symbol for them is GILD. And they've been a serious winner. They are up almost 15% since I made that recommendation. So I'm definitely very happy with this performance. I think that they are a good company. I won't be buying any more since they're up quite a bit, but I was definitely adding quite a few shares down here when I made the recommendation. So I think they're solid. Overall, good performance from Gilead. So then the sixth company that I recommended for June of 2017 was Realty Income. The symbol for them is O. And I made this recommendation on May 22nd, and since then they are up 7.22%, plus they do have a 4.4% dividend that they pay out monthly. So I think you've received about 3 dividends if you bought this stock when I made the recommendation. Definitely been a solid performance from Realty Income. I'm very happy with this company. I've owned this stock since 2014, and it's definitely a great company in general. And then the final stock that I recommended in June of 2017 was Phillips 66. And they've done very well recently. They did pull back quite a bit off of their highs. but they are still up 6.2% since I made that recommendation, and they do have a very nice dividend, so I'm pleased with their performance as well. And since I made my video recommending all of those stocks, the S&P 500 is up 2.1%, so I will use this to compare my picks to the S&P 500. So the June stock picks without dividends included was up 1.14% compared to 2.1% for the S&P 500. The June stock picks with dividends were up 1.92%, and I factored in dividends the same as I have in the last videos, where I take the average monthly dividend from these stocks because I plan on holding them for more than a year. It doesn't really matter when the dividends are paid out. It just matters what the average dividend you would receive from all of the stocks is over 1 month. And then the S&P 500 with dividends was up 2.52%, so we did slightly underperform the S&P 500. So the June stock picks underperformed the S&P 500 by 0.6%, and this is the first time of the 3 months that I have recommended them that they have dipped below the S&P 500 in terms of performance. And it's definitely a shame that they are underperforming as of the recommendation. However, like I said in the first 2 videos, when they had outperformed, the short-term performance really isn't all that important. What matters is the long-term performance. So I'm hoping over the next few months they will pick back up and continue to outperform. But what really matters is in the next few years. And the underperformance was pretty minor, just 0.6%. So really a few days of trading can recoup all of those gains if the stocks that I recommended are up more than the S&P 500. So thank you for watching. If you enjoyed this video, leave a like down below and consider subscribing. If you guys have bought any stocks recently, comment down below on the performance of them since you bought them. And thanks for watching.